The top business stories live from the Sky News City studio. A surprise rise in inflation, up slightly to 4%, pushed up by the government's own tax increase. Shares of Boeing rise after the US aviation regulator completes inspections of some of the 737 jets. Confidence is up. We'll speak to JP Morgan, whose leader survey shows almost three-quarters are optimistic about their industry's performance. Good afternoon. This is Business Live with me, Ian King. Inflation rose last month in the UK for the first time in 10 months. The headline consumer price inflation measure rose to 4% in December. That's the first time CPI has risen since February last year. It was up from 3.9% in November, which was higher than the 3.8% expected by economists. Well, the Office for National Statistics said the increase was due mainly to higher tobacco prices as a result of duty increases announced by the Chancellor in his November autumn statement. Well, the Chancellor, Jeremy Hunt, says the overall downward trend is proof his plan is working. The Shadow Chancellor, Rachel Reeves, believes she can do better.
Inflation never falls in a straight line. We can see from the rest of the world, it's gone up in France, the United States and the Eurozone. But here in the UK, it was 11.1% when Rishi Sunak became Prime Minister. It's more than halved. It's still nearly a percentage point lower than where the Office for Budget Responsibility predicted it would be only in the autumn statement in November. So we have a plan. We've taken very difficult decisions to bring inflation down. That plan is working. And what today shows is that we need to stick to that plan, and then we will succeed.
Well, I was here last year, I'm here this year, and if Labour are successful in the general election later this year, I'll be here next year as Chancellor, working with business to get investment into Britain. And I think it is important that senior government ministers are here, particularly on the economic stage, because this is where business and investors come together. And you see leaders from other countries around the world here. And without that leadership from the government, we're missing out on investment, we're missing out on jobs and prosperity. And I am determined that if I am Chancellor this time next year, I will leave no stone unturned in bringing jobs, prosperity and investment to Britain.
Well, that was my colleague, that was Rachel Reeves talking to my colleague Ed Conway in Davos. Well, while inflation may have ticked up in December, a significant proportion of business leaders are optimistic about both the UK and the global economy, according to the annual UK Business Leaders Outlook survey published by the investment bank JP Morgan. Well, some 48% of UK business leaders are optimistic about the global economy this year, compared with 26% who are pessimistic, while those figures are 43% and 32% for the UK. And when it comes to their own company's performance, well, 82% are optimistic about prospects for 2024, compared with just 7% who are pessimistic. Well, joining me now is Catherine Pierre. She's head of Commercial Banking UK at JP Morgan. Catherine, great to see you again. This is quite a sunny outlook, I would say, but yet 42% of the people who spoke to you said that they think the UK is either heading for recession or already in it. How do you reconcile that?
No, you're absolutely right in saying that a lot of the leaders who were surveyed confirmed that they were expecting recession or confirmed that we are already in one. That being said, it came across very clearly in our survey that leaders are actually very optimistic about the future, what lays ahead in 2024. And I think this is, if you compare it to last year's survey, it actually shows that a lot less people are pessimistic, and there's a move from pessimism to at least a more neutral stance.
Why do you think that is? Is it also down to the fact that interest rates are going to come down?
I think it's linked to several factors. I think, as one of my clients mentioned to me back in December, there's nothing that he can do about things that he can't control. So it's all about, making sure that you address what you can address. And really, it's not a question of looking at the world with rose-tinted glasses, but rather really the motto of keep calm and carry on.
Well, quite. I mean, when we had this conversation this time last year, I think 69% of respondents told you they expected a recession this year. We didn't get one.
Correct. But I think it just shows that the decreasing in percentage confirm that people are becoming more and more optimistic, which is definitely something that we are seeing a very clear trend on.
Are there certain sectors which are markedly more optimistic or pessimistic than the pack?
In general, it was across all sectors, so I wouldn't say if there's one specific sector. that was really came across in our survey as a major one, which was either more optimistic than others or actually more pessimistic than the rest.
Now, one of the hot topics right now is business investment or the lack of it. How is this optimism going to translate to business investment this year, do you think?
Yeah, it's very clear that business leaders on the mid-cap space have realised that it's important to continue to invest and to invest again in what they can control. So typically their own companies, making sure that they address any innovation economy, and really what was quite clear in the survey is that people are moving away from certain issues that they faced last year, such as energy prices, as well as, in general, focus on supply chain. As you might remember, Ian, last year, this is no longer something that they are focusing on, which is, I think, again, another element of optimism.
Now, 58% of respondents told you that they expect their credit needs to increase this year. Very good news for banks, obviously. What sort of forms will this financing take, do you think?
Yes, I think what is quite clear is indeed growth will come with capital needs. And I think we are lucky at JP Morgan to be able to help our clients access those capital markets as well as provide direct use of our own balance sheet. So you're absolutely right that it will growth. What it was a focus of this year's view of our leaders. The reality is it comes along with capital needs as well.
Well, higher optimism, animal spirits, if you like, normally means more M&A, more IPO activity. That was a dearth of that in the UK last year. Are you optimistic there'll be more this year?
I think we see markets reopening. I think investors becoming more open, but they are still selective. So hopefully we'll see the markets reopening for a longer period.
And what about company valuations? I mean, every CEO you talk to privately always complains about their stock market valuation. Is that justified?
I think, at the end of the day, it's all about making sure that you're ready to approach a window when the market opens. So it's all about coming ready. And hopefully with the help of JP Morgan, you are in a position to prepare for when the window opens.
All right. Well, you've got the plug in there. Catherine, good to talk to you again. Thank you.
So much.
More of the day's business news for you now. And the Federal Aviation Administration, which is the main US aviation regulator, said this afternoon that it has completed inspections of an initial group of 40 Boeing 737 MAX 9 jets. The inspection follows an incident 12 days ago in which a cabin panel came off in mid-flight on a MAX 9 operated by Alaska Airlines. Well, the FAA said on Friday last week it would need to re-inspect 40 out of 171 grounded planes before deciding whether it is safe to allow the Boeing MAX 9s to resume flying. Well, shares of Boeing have risen by 1.25% this afternoon. BP has confirmed that Murray Auchincloss, its interim chief executive, will take up the role on a permanent basis. The appointment, first reported last night by Sky's Mark Kleinman, maintains BP's record of never having appointed an outsider to its top executive role in its 116-year history. Mr. Auchincloss, who's Canadian, was previously BP's chief financial officer, but he was made interim CEO when Bernard Looney resigned in September after having failed to disclose to the board past relationships with BP employees. And the European container shipping giants Maersk and Hapag-Lloyd have announced plans for what they call a long-term operational collaboration under which they will share capacity. The pair, respectively the world's second and fifth largest container lines by capacity, said the collaboration would comprise around 290 vessels with a combined capacity of 3.4 million 20-foot equivalent units of containers. It comes after both businesses pulled out of existing alliances with partners across Asia, but is not thought to be related to the recent attacks on ships in the Red Sea. Now, wages data published yesterday showing a sharp drop in the pace of earnings growth in the 3 months to November has confirmed the picture of a cooling jobs market. Well, that's been underlined today by data published by LinkedIn, the business and employment-focused social media platform, which points to job seekers facing more competition. It says that in recent months there has been just one job opening for approximately every 4 applicants in the UK and France. That compares with one job opening for every 2 active applicants in those countries in 2022. Well, joining me now is Josh Graff. He's Managing Director of LinkedIn in Europe, the Middle East and Africa. Josh, good to see you this afternoon. Is this because there are more people looking to change jobs, or are there just fewer job openings?
The labour market has certainly softened over the last 12 months. As you said, competition in the jobs market has doubled. We have 2 active applicants for every role in the UK and France. We now have 4. But the 2 primary reasons why people are looking for new jobs, one of them is money. There's a cost of living crisis. People feel like there's an opportunity to secure a higher salary by moving roles. And then secondly, people are looking for increased flexibility. But despite the challenges in the labour market, we're still, perhaps it's because of the new year, lots of people making New Year's resolutions. 70% of professionals across Europe are telling us that they're considering changing jobs this year.
Goodness, that's quite striking. Does it vary much from country to country?
It's pretty consistent, actually, across countries. The one thing that is consistent is the 3 bright spots, the areas where people are hiring. And one of our goals at this time of year is to really help our members understand where in the economy they should be focused. And the 3 key areas this year are green skills. In high demand, there's a skills gap there. Lots of people looking for things like carbon accountants, for example, sustainability managers, energy brokers. Lots of focus on cybersecurity. That's been in the top list now for a couple of years. And then perhaps you won't be surprised to hear, but lots of businesses at the moment looking for people with skills in artificial intelligence.
So if I've got skills in any of those, I'm doing fine, Josh. What about those roles where there's a real surplus of people looking for work?
It's certainly, as I said, a tough economy at the moment. The question I would ask yourself is, if you're on the jobs hunt, how do you upskill in some of these areas? Take artificial intelligence, for example. You don't necessarily need to go and get a PhD in artificial intelligence, but you can go online, you can take a series of free online learning online learning programs, you can download tools like ChatGPT, for example, experiment with what that does for you. And then when you go in for that interview, talk about your experiences, talk about the experiences you've had using those different AI tools. That will really allow you to put your best foot forward and to differentiate yourself from the competitive set.
What do we know about the typical professional looking to switch jobs at this time of year, Josh? What sort of stage in their career are they, and roughly how old are they?
It's interesting. This is consistent across every age group. Actually, Gen Zs were slightly higher. The number I mentioned to you earlier was about 70. I saw some data earlier today that almost 80 to 85% of Gen Zs are looking to move, but pretty consistently across every demographic, no matter how long you've been in the workforce.
And what sort of uptick in salary can someone moving jobs in some of these fields typically look for?
I haven't actually seen that level of data to understand what the uptick is. We know that moving jobs is an opportunity to increase your salary, but it doesn't necessarily happen all the time. I think a lot of people end up going into the salary negotiations realizing that it's going to be relatively similar to the job that they're doing today, but recognize that it's an opportunity to upskill themselves, to challenge themselves, perhaps to have a bit more flexibility. I think off the back of COVID, so many people for the first time experience flexible working, either remote or hybrid, and that's certainly front of mind for folks at the moment as well.
That's an interesting point you make. I mean, you seem to be suggesting that someone who doesn't necessarily get the job they want but is still looking for a change might well take some time out and potentially garner more skills.
Absolutely. I don't think you necessarily need to take time out. You can obviously upskill on the job. One of the big areas of focus at the moment is learning and development within these organizations, within businesses around the world. They have to be reskilling, they have to be upskilling their workforce, especially on digital skills. It's super interesting. If you look at our jobs on the rise this year, 50% of those jobs did not exist 20 years ago. And we know that the skills for the jobs of the future are going to change yet again on an annual basis. And so I can't stress enough how important it is, not just for the private sector, but for the public sector to really invest in upskilling in digital.
Very interesting point. Briefly, Josh, do you think businesses are investing enough in this themselves?
I think there is a cautious outlook. I was listening to your guest before. It sounds like there's a little bit of optimism creeping in. I think there's always opportunities for companies to invest more in digital upskilling specifically.
OK, Josh, got to leave it there. Appreciate you joining me today. Thank you. Still to come here on Business Live, we'll have a look at how the markets have finished this Wednesday afternoon. Stay with us.
So the album name is Pick Up Full of Pink Carnations, and it's a phrase that came to me when I was writing a song called The Dreamer. I was living on the west coast of America at the time, and it felt familiar, but I wasn't sure why or where it had come from, and I spent a couple of days Googling it to make sure I hadn't plagiarised it. And then a few weeks later, I realised I'd misremembered this lyric of Don McLean's. I was a lonely teenage bronco buck with a pink carnation in a pickup truck. And I guess that song...
I was out of luck when the day the music died.
Exactly. And I guess to me that song has always seemed to be about, you know, disillusionment and the death of the American dream and loss of innocence and all that kind of stuff. And I guess those were themes I was exploring on the record. So, you know, a phrase that began life as a sort of empty vessel, but quite nice sounding empty vessel, over time came to kind of mean everything, I guess, with regards to our own record.
And where did the name The Vaccines come from?
Well, that was an empty vessel as well. I think I had I was taking Spanish classes and I had this Spanish dictionary. I was just looking for words that kind of meant nothing. And I thought the vaccines didn't really mean much at all.
Means a lot of sense, though, doesn't it?
It does indeed, yeah. It's very exciting. I mean, we released a record in 2021 that we recorded in 2019, so never really got to tour it, which is quite frustrating. So this is the first time we've gone back on tour properly for like 4 or 5 years, and I think for us it's one of the most rewarding things about playing, really. So yeah, very exciting.
Indulge us by listening to some of your music.
I think most of the year. We start in Europe, then we've got UK, then the US, then a little further afield, I think Australia and Asia, and then festivals, and then hopefully Latin America after that. So yeah, it's pretty exciting getting to see the world with your best friends and like performing for new people every night.
You're still best friends?
We are, unbelievably, yeah.
Fantastic.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Well, the pound rose on the foreign exchange markets earlier on this morning on that unexpected rise in inflation on the basis that it pushes interest rate cuts further into the future. Sterling's given up most of those gains as the day's gone on, but it's still up 0.25% against the dollar, up 0.2% against the euro. The single currency off 0.6% or so against the dollar. On the equity markets, European stocks have closed to the downside this afternoon. All of the main continental indices off by between 0.75% and 1.25%. 0.25%. That's after comments from European Central Bank officials dampened hopes of early interest rate cuts in the Eurozone. Well, here in London, it's a similar picture, if not worse. The FTSE has finished off nearly 1.5% lower, 112 points off. The big dollar earners have weighed on the index thanks to that rise in the pound. I can tell you, Shell and AstraZeneca alone have clipped 30 points from the index. In percentage terms, well, Ocado has fallen by some 6% following yesterday's trading update, while the house builder Persimmon is among many of the fallers today, which is down on dampening interest rate cut expectations. Persimmon off by some 5%. The property group Land Securities also depressed by that prospect of interest rates remaining high for longer. That's off 4%. Outside the FTSE 100, well, the pub operator Mitchells and Butlers is finished up nearly 3.5%. That's on the back of an upbeat trading statement, while the geotechnical contractor Keller Group is up 1.75% for similar reasons. To the downside, 888 Holdings, the owner of William Hill, has finished down 1.5% as it said profits would be at the lower end of forecast. It was off 10% first thing this morning. On Wall Street, all of the major stock indices have opened to the downside, with news that US retail sales in December came in ahead of expectations. That's depressed hopes of early interest rate cuts there. Talking points today include Charles Schwab. The brokerage is off nearly 3% after its results disappointed. Meanwhile, the oil price is lower after Chinese GDP data published this morning raised concerns about future demand. A barrel of Brent crude will currently set you back $77.48 a barrel. That's off a little over 1% on the session. Well, with me now is the Global Equities Manager at Artemis, Natasha Ebdehaj. Natasha, great to see you again. Let's start with China, shall we? I mean, the number was actually ahead of the government's forecast, but people didn't really like the detail.
No, I mean, it feels like every single month when we come back and we talk about China macro, it's a bit of a tape on repeat and still waiting to move on to the next song. So the economic growth numbers only grew 1% this quarter versus the last quarter, and really showing that kind of sequential maybe slowdown, government wanting it to be closer to 5 probably for next year. And I'd say really that the investors have been looking for more of an upturn maybe in property. It was like a big drag last year. That continues to be a drag this year. Sales were down 8% year on year. They've started republishing some of the jobs numbers again for the youth unemployment. That's still quite high at plus 15%. And all of that just weighing on the consumer, retail growth also slowing. So really investors now looking, when is that stimulus coming? And on that, we're starting to see a little bit of a sign that at least a message getting through to the top, and we're starting to see some movement, but really isn't quite enough. Although we've taken a bit of a contrarian view, we think that maybe some of this might be in the price. We've added a little bit to some of our Chinese exposed stocks, such as Nike. We just think that there is nothing in the price for recovery, and just starting to dip our toe a little bit in there.
That's very interesting. What about closer to home? Obviously, we've had fairly dampened expectations in both the UK and the Eurozone about rate cuts today.
Yes, I mean, a lot of that comes off the back of that inflation print earlier that you were mentioning, and it really does feel like on that downward path to inflation, we've hit a little bit of a bump, and maybe investors questioning whether that slight uptick plus 0.4% month on month for the UK inflation is enough to really push back some of those interest rate cuts. And that does look like it's happened. So yesterday, the markets were thinking that the first cut was going to come from the Bank of England with an 88% chance in May. That's fallen to about 66% chance now. And for the full year, they was expecting over 5% cuts. Now that's down to closer to 4%. So yes, it has pushed that back. That's weighed on some of the more interest rate sensitive parts of the market, such as home builders. And then also a part of that has been a small cap called Ibstock, which makes bricks. They've also had a trading update. Sales were down 20% last year. And then also the house price index down 2% for November. So a culmination of multiple things just weighing on the market, at least in the short term, as we're looking to inflation.
No, I mean, we shouldn't get too carried away, though, should we? I mean, there will be interest rate cuts this year in the US, the UK and the Eurozone, just maybe not as early as people thought. I
think that's exactly right. We've been on quite the inflation roller coaster, haven't we, since the pandemic? But I think we are very firmly on that downward slope now. Even looking at the UK inflation numbers today, one of the components that drove that slight upward surprise was the services, and within that, packaged holidays. So if you're booking your holiday now you might be seeing some of that. But that's also just not an area that the Bank of England is as concerned about. But just taking a broader step backwards as well, looking more broadly at other central banks, they're looking at the inflation numbers. There is a very firm downward trajectory. Jobs markets are less tight. You had a guest on earlier also alluding to that. And then also on the housing component, which is a big part of inflation, that has been coming down in a lot of markets. So that hopefully should bring inflation closer to target, central bank's targets in the next few months, and we should see cuts this year. The market's just debating the size, maybe and the timing, but it is coming, which should bring relief to mortgage owners, to companies that need to borrow, and hopefully to markets as well. It should do, provided that growth does hold up.
Indeed. Very briefly, Natasha, you just don't bet against the US consumer. Again, consumer strength in the US.
Yeah, no, the number that we've just seen actually has been a positive surprise. And I think that what it does show is that the US economy is holding up better than maybe what people had been forecasting last year. I think a lot of people were expecting recession, and the consumer has continued to do well. And a lot of that is partly because of jobs. People are still in jobs, and that's been key. And if we do come out of this downward patch with no recession, that will definitely be one of the reasons why.
It will indeed. Natasha, good to see you as ever. Thanks for joining me today. That's it from me. I'm back again tomorrow morning at 11:30 with the next edition of Business Live. Hope very much to see you then. In the meantime, stay tuned. After this short break, it's Jonathan Samuels with the News Hour. Thanks for joining me today. Cheerio.